So hello and welcome everybody. My name is Robert Hackett and I am going to be your instructor for the day. We're going to be talking about all things crypto, Bitcoin, Ethereum, Web3, and the many aspects that involves, from DAOs to NFTs and all the other acronyms and weird words that you're seeing prop up online. So let me just share my screen now, so that you all can see the presentation. Alrighty. Here we go. How is this? Good. Okay, I think that should work. Let me just see if I can get our chat up as well. Whoopsie. Bear with me while I figure out getting our chat in order here. Okay, well, I'm not really sure where my Zoom chat went, but that's all right. I'll find it eventually.
Robert, when you had the presentation on the full screen, we still had our access to our chat.
Okay, yeah, I'm not sure why oh, here we go, it's up here. Okay, got the chat going. All right, we're in business now. Sorry for the technical difficulties. Okay, cool. So yeah, the name of this course is Mastering Crypto, How to Cover Bitcoin and Beyond. And I am your host today, Robert Hackett. So some of the things that we are going to get into. What you're going to learn today, the essentials of crypto reporting. We're going to learn a little bit about blockchains and how they work. We're going to learn about some of the cryptocurrencies, the major cryptocurrencies out there, from Bitcoin to Ethereum, and we'll address some of the others as well, but those are the main two. You joined at a pretty interesting time. I don't know if anybody's been watching the markets right now, but everything seems to be in a dumpster fire free fall. So we can talk about that a little bit if you like. And of course, Web3, which is this new vision of what the internet is going to be like after the kind of one that's been dominated by big tech giants that we're so used to, like Facebook and Google and all these companies. We're also going to talk about how to set up digital wallets, and I'm going to walk you through how to set up your own digital wallet. That way you can go exploring in this new world in Web3. And hopefully we'll have you participating in decentralized autonomous organizations and DAOs and buying NFTs and doing all sorts of wacky things that you can do in this new world. The goal is to get you here to be the Jedi Master of Web3. Some things you are not going to learn today. I'm not going to be giving you any insider information or investment tips. Very sorry about that. I would love to share, but I cannot. None of this is legal or financial advice. I'm not going to try to help you get rich quick, although I'll support you if you're endeavoring to do that. And of course, you're not going to learn any of our passwords or seed phrases, any of the things that we should be keeping secret here, especially as we set up digital wallets. Okay, who am I? I'm Robert Hackett. I formerly was a senior writer and tech editor at Fortune magazine, where I was for 7 years. I just left in the fall to join Andreessen Horowitz, which is a venture capital firm out in Silicon Valley. And I've joined their crypto arm. So they've got a very big investment business that relates to cryptocurrencies, and I am heading content and editorial for them. who I am not. I'm not your lawyer. I'm not your financial advisor. I'm not your tax accountant. Anything I say here is just for knowledge and educational purposes only. And just as a disclosure, some of the projects I mentioned are probably, some of them are investments of Andreessen because we invest all across this Web3 world. So just disclosing that up front, I'll try to keep us honest about, what's what here, but we have a lot of investments. So I don't even know all of them, to be honest. Okay, so first off, let's have a poll. Do you own any crypto? So I've set up a Slido here. Let's see if I need to do anything to get that going. I think it should, give me 1 second. Okay, do I drop this chat in? This link into chat? Let's see if everybody can access this link.
Says I need access.
Ah, okay. Let's see. All right, well, I thought I set this up, but we're having some technical difficulties. Yeah, okay, so let's drop the code. How do I get back here? Okay. All right, here we go. Okay, let's try this now. All right, I don't know how to get Slido working. So everybody, if you own crypto, why don't you just drop me a thumbs up or like a wave or something in the chat over here. Okay, we've got some crypto owners floating in. I see some yeses. Very small amount that you manage poorly. Well, right now, everybody manages this stuff poorly, as we can tell by the price charts. We can actually take a look at how the markets are doing because I haven't looked today. Let's see the total market cap here. Yeah, things are not looking so hot. Okay, but I'm surprised. We've got a bunch of people here who actually are owners. I'm seeing some no's. Jeremy's a not yet. We're gonna get you into getting some, I'm sure. Some people got rid of it. Okay. So I'd say we have a fairly sophisticated audience in terms of people who have some. Okay. Apologies for Slido not working. I would love to have a breakdown, but I'd say it's there are a lot of people here who actually do have it. So let's talk about this. Can crypto reporters own crypto? Is that even allowed? Let's get into the ethics of journalism. So first off, it kind of just depends on what the rules of your employer are. A lot of big major national media brands have a lot of rules around this. Maybe they'll forbid it, they could limit it, they could require you to disclose it. Some crypto outlets, they pay people though in tokens. So you've got a pretty big schism here where on the one hand, big national brands, they might not want you to own crypto or only own very, very de minimis amounts. Whereas there's a whole budding world of decentralized crypto-focused media organizations that actually pay out in Bitcoin and other sorts of tokens. And they're all about owning it and participating in it. So it's a pretty wide spectrum. But just to give you a little bit of background, the Washington Post famously has had editors who refuse to vote in presidential elections because they want to not have any implication that they are potentially biased in any way. And there have been instances where reporters have owned Bitcoin or other cryptocurrencies, and it has caused quite a kerfuffle in the media world. So back in 2014, way back when, this was ancient times in Bitcoin land, there was a reporter at Vox who bought some Bitcoin, and he wrote an op-ed saying that he was going to make the leap, buy some Bitcoin, and write about it because he sort of believed in it. And Ezra Klein, who now is a columnist at the New York Times and has a podcast there, but before that he founded Vox. He was none too pleased about this, even though he gave his initial permission, because there was just such a huge backlash about it, and they had to walk it back, and the guy had to sell the Bitcoin ultimately. But it just depends on what your employer wants. So definitely follow their rules. There is a pretty big, this is that schism I was talking about before. If you talk to somebody like Felix Salmon, who is a financial reporter who works for Axios, he would say that the most trustworthy journalists don't own any. And he cited a few people here, Isabella Kaminska at the Financial Times, Nathaniel Popper previously of the New York Times. They both are people who have, sought not to own any crypto so they can write about it in an objective way. And his point is that, if you were covering a company, would you own stock in that company? In business reporting, that is not looked upon very well. The old rule at Fortune was, if you were going to write a big story about a company in the magazine, you couldn't own stock in that company for, I think, about 3 months was the old rule. But then the internet came along and kind of destroyed the reasoning behind that rule, because we're pumping out stories all the time, and it didn't quite match the logic of publication there. So anyway, you've got Felix Salmon over on the one side over here, who says, if you're going to cover crypto, don't own any. And then on the other side, I've got Anthony Pompliano, who is a big podcaster. He's got tons and tons of listeners, and he is always talking about Bitcoin, talking about why it's a great investment. Now, his path is not a traditional media path, but he runs a media business. He's a solo brand, and he says that, you want to have skin in the game, the things that you're writing about. You can trust people more who have skin in the game because they know what they're talking about. So this all goes to say that the job of a journalist has changed drastically in recent years, and there is no sort of single definition of what it means to be a journalist or what it means to engage in media. So you have to kind of develop rules of your own. And I've done this. I can share my philosophy with you, which is, don't be evil, don't be unethical. It's all about trust. You want to be honest with your audience. You don't want to be misleading them about anything. Now, I strongly believe this, that the best way to become an expert is to test these technologies yourself. And then finally, when you're in doubt, disclose. Let people know what you're buying, what you have, what you hold. That way you can be totally upfront with people about your positions. You don't want to be shilling or pumping things you own just so that you can make a quick buck. That would not be ethical. So it looks like somebody was able to get into the Slido. So great. Okay, that is the code. And we'll have a few more Slido things coming up. So maybe Victoria, you can help everybody else get access to that when those questions arise. And we also have a question here, which is, so isn't there an argument to be made that if you don't own, or if your publication doesn't own on your behalf, you can't really cover the beat? So that is a really great point that Catherine has dropped in here. And it's one that I made to Fortune when I was working there, which is, again, how could I knowledgeably cover this stuff if I don't interact with it, if I don't understand how it works, how to like create a wallet, send money around, to join a DAO or vote on various protocols. And we'll get into what all this stuff means later on. But, Catherine, I totally agree with you. I think that it's important to be able to participate in this stuff so that you can actually get your hands dirty and understand how it really works on a firsthand basis. That's just one person's opinion, though. So we're going to do another poll, and this is also available at Slido. So Victoria, maybe you can let me know if you can access this if you go to the Slido link and use that code. I don't know if everybody can see in the chat here, but the code is 777333. So just asking people to let me know what they are most interested in learning today. So maybe now that I've clicked over to the Slido slide, maybe it'll let people enter. Here, I'll do it too. Whoops. Okay. Okay, maybe I need to re-ask the question. Let's see. Activate the question, or we can use the Q&A. Let's see. All right. Is that working for anybody? Okay, well, that's fine. I need to figure out how to use Slido better. Instead, we're just going to use the Zoom chat. Yeah, so Catherine has asked whether we can talk about DAOs and NFTs at some point. We certainly can. But yeah, I'd love to know from everybody here what you're most interested in learning about. So you can drop something in like you want to learn about Bitcoin, or maybe you want to learn about Ethereum. Maybe you want to learn about Web3. Maybe you want to learn how to make money. I'm not going to be of much use there, but you could drop it in the chat if you wanted to. So yeah, everybody just drop in the things that you're most interested in into the chat. I'm seeing DAOs, NFTs, a couple people talking about NFTs, Web3. I'm going to put down Web3 because, looks like I'm direct messaging somebody, ignore that. I'm going to drop down Web3 because that's what I'm pretty interested in. All of it, Amanda says she wants to learn all of it. Thank you. I think that's great. We will get into all of it. Why new currencies are created and what internal conflicts there are in the crypto world right now. That's a great set of questions that we can dig into for sure. Okay. Someone, Victoria over here, would like to know more about what a blockchain is and what a decentralized exchange is. Also the difference between proof of work and proof of stake and NFTs. We'll dig into some of those topics. And if I don't address any of them to your satisfaction, you can hold me accountable later and re-ask them when I have some question and answer periods. Okay. Okay, some people want to just know about cryptocurrency, how it works, whether Web3 is the same as the metaverse or different. Good question. Facebook has changed its name to Meta in honor of the metaverse. There are intersections between the two of them, but they are distinct and different. But then again, they are both just sort of buzzwords and can mean whatever the person speaking them means. So there's definitely a Venn diagram overlap there. We've got someone who's just commenting that it seems pretty abstract. Okay. And this is a great question from Jeremy. How can independent journalists use these technologies to support themselves, to sustain newsletters, podcasts, and other things? I have a section at the end here about some of that, and we'll definitely talk about that. I think it's super interesting how you can carve your own path and navigate, a sort of journey of your own using this tech. Future of DAOs, and it's going to have a lot to do with DAOs. So excellent. For people who are just joining, we're just talking about the things that people are most interested in learning today. Please remain on mute for the time being. And we will, so anybody who just joined, feel free to drop what you're most interested in into the chat. And we'll continue on with the slideshow. Okay. So to kick things off, I know nobody said they wanted a history of money, but I'm going to give a quick overview of the history of money just so that we all kind of know what we're talking about, where this stuff comes from. So let's start way back. Back once upon a time, people bartered. They traded goods and cattle. That's sort of the fairy tale version of the prehistory of money. As told by economists. It was made famous by Adam Smith in his book, The Wealth of Nations. You might remember Adam Smith for being sort of the inventor of capitalism and the person who came up with the idea of the invisible hand of the market. This is kind of, I described as the fairy tale version of where money came from. But actually, there's a really great book, highly recommend it, called Debt, The First 5,000 Years. I know it doesn't sound riveting, but it is very good. And it's by the late anthropologist David Graeber. And he argues that actually money was not the economics and money were not a barter system. That's not where it came from. It came from a sort of system of social debt and credit, basically saying like, you live in a tribe and people are like, I owe you one, you owe me one. And then eventually that sort of got tabulated into ledgers, into actually being recorded. And it first got recorded in Mesopotamia, which is modern day Iraq. Does anybody, oh yeah, David has dropped David Graeber's name. That is the correct spelling. Highly recommend that book for anybody who has not read it. Yeah, okay, so does anybody know what the first human language, what the first artifacts of human language are? In other words, what were people recording when language was first developed, when written language was first developed, that is? Maybe you could drop it in the chat if you happen to know. But cuneiform script developed in 3200 BC, around the same time that cities first started forming in ancient Mesopotamia. And David is right on. Thank you, David. You're my assistant for the day. So yeah, the first written language actually was used for something as boring as accounting. You might have heard of the Epic of Gilgamesh. It's an old epic poem. It's the oldest piece of literature that we have. But that came well after the development of written language, which was just for basically recording receipts to make sure people were paying their taxes, going up to the local city temple in a city like Uruk and paying your grains so that everybody could kind of live together in a city. Kind of cool to think that we have these records from so long ago. After that, another big development was the development of metallic money, specifically precious metals like silver and gold. Or if you were in the Lydian Empire in Turkey back in 600 BC, you would have used electrum, which is a sort of combo of gold and silver. And back in that place in Lydia, there was the Lydian stater. You can see a photo of it right over here. It's got this lion on it. This is the first money that had a state seal on it. And actually, not too far away over in China, there was metal money developed in the form of spades and blades. These are sort of token currencies. And later down here, you had actual things that look more like the coins we're familiar with today. They came about hundreds of years later in China. All right, so in 44 BC, which is around the time of Julius Caesar, you started getting Roman emperors, living Roman emperors, stamping their faces on money. Before that, during the Roman Republic, you had gods on coins. Back in the Greek times, the Greeks put gods on their coins as well. But then emperors realized that this was a great form of mass media propaganda, stamp their face on it, and basically equate themselves with the power of the state. After that, you have the development of paper money in China. A few dynasties decided that it was easier to give their merchants paper money, since it's a lot less heavy than precious metal. And down here we have Kublai Khan, who during the Yuan dynasty, in say 1200, the year 1200 to 1300, they actually printed so much paper money that they caused hyperinflation. It devalued the currency. It was a big problem. And this is something that we'll talk a little bit about later. But Bitcoiners like to say that central banks are printing too much money and that they're devaluing the currency, and that's a reason for using Bitcoin. Okay, so after paper money, you have the Italian Renaissance, where you had all sorts of inventions, just an absolute explosion of innovation. You had Leonardo of Pisa, who you might know, his name is Fibonacci. You might know him from the Fibonacci sequence from the Da Vinci Code, if anybody has read that book. But he basically brought over numerals like these, which I'm dropping in the chat, the sort of number system that we're very familiar with, because prior to then, everybody was using Roman numerals to do math. I don't know if anybody is familiar with Roman numerals, but they're pretty complicated. If you watch the Super Bowl, it's always like Super Bowl 50 or whatever, and it's a V, VII. Imagine doing math with all those V's and I's and X's and L's and D's. It's a mess. So anyway, Leonardo of Pisa brought us numbers over from the Arabic world. And you also have the development of bonds, banking, double entry bookkeeping. I won't go into too much detail on all of these. After that, you have central banks start to come about, and they have a whole bunch of innovations related to that. You can just take a look at this, but yeah, I don't want to spend too much time dwelling on it. But yeah, so central banks come about, they start playing with money in all sorts of ways. One big thing that they do is they decide to keep reserves of money, but fractional reserves. So they lend more money out than they actually have stored in their vaults. Now, this is hugely beneficial to an economy because you can make what money you have work more because you can put more out there, and you develop credit systems that are huge, big national credit systems. Also around this time, you have the first publicly traded company comes about, the Dutch East India Company. And they have basically a monopoly on trade and exploration and going to the Spice Islands. They are a Dutch company, as their name suggests. And there was a whole mania involved around their stock. But that is pretty important as we talk later about tokens and Web3. I'll return to the Dutch East India Company. Just two more slides, bear with me on the future, on the history of money. In the 1900s, the US dollar rises. We have a detachment from gold, and also a whole bunch of other things come about, credit cards, money markets, hedge funds, computers. Things start getting really crazy in the 1900s. And that brings us up to today. Basically, the internet takes off. Everybody carries a supercomputer in their pocket called a smartphone. And some crazy, wild genius man dude, I mean, actually, we don't know if it's a man or what, but some person or entity or group invents Bitcoin, the world's first cryptocurrency. So yeah, that brings us about up to the present day. I don't know if anybody has any questions about the history of money, but if you do, feel free to drop them in the chat and I'm happy to get to them. Yeah, so we'll move right on. I was going to take a break, but I think we're cooking with oil here. We'll keep going. So welcome back from the break. We're going to talk about Bitcoin. Okay, so the first thing to know about Bitcoin, we mentioned that it was created in 2008 by someone named Satoshi Nakamoto, who remains unknown. Nobody knows who this person or group is, which is pretty amazing. And it has fed into the whole mythology of Bitcoin and I think helped make it a, a cultural phenomenon. Oh God, Amanda suggests that it's Steve Bannon. Put your best guesses as to who Satoshi Nakamoto is in the chat over here. We have one for Steve Bannon. Me, I wish. If I were Satoshi, I would not reveal it. So I can't be trusted there. Actual brilliant Japanese guy. Possible. In fact, Newsweek, the magazine that you might be familiar with, they very famously back in, I think it was 2014, claimed to have found Satoshi Nakamoto. And that's this photo I have here of basically some random guy named Dorian Nakamoto, who happened to have the last name Nakamoto. And the Newsweek reporters, they believed that they had discovered the true Satoshi Nakamoto, who had only thinly veiled his identity by changing one of his names, but not the other. This was pretty much a huge embarrassment for Newsweek. Who's to say if it is Dorian Nakamoto, but the consensus is it's probably not. I mean, look at this guy. Does he really look like the inventor of Bitcoin? Catherine Hayes, someone who aims to pull off the greatest systemic risk event ever, pulling down most economies. That is who Satoshi Nakamoto is. Them's fighting words. Anyway, here's what we do know about Satoshi. Satoshi was a cypherpunk. What is a cypherpunk? It's basically a libertarian activist who writes software and code to achieve their social and political aims. Cypherpunks were a movement that really arose, I'd say, in it got its stride in the 90s on the West Coast. So you had this confluence of counterculture, fighting the man, and also this proliferation of new technologies and the internet and software. So a bunch of these cypherpunks, they would hang out on a mailing list. And Satoshi presumably hung out on that mailing list because on Halloween in 2008, an email arrived to the cypherpunks mailing list announcing that some person named Satoshi Nakamoto had been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. Pretty understated note. He pointed to, this is a screenshot of that email, which you can find records of on online archives. And he pointed people to the Bitcoin white paper. The Bitcoin white paper, published in 2008 by Satoshi Nakamoto, described exactly what the title says, a peer-to-peer cash system. And we're going to get into what that is. The Bitcoin white paper, by the way, it's only 8 pages long. If you have not read it, it's very easy to read. It's quite digestible. James has clicked the link and he's looking at the Bitcoin white paper right now. So you can follow James and read along. You might want to read that in your spare time. But I highly recommend it. It's pretty easy to understand and you can get a really good sense of what Satoshi was doing. So let's talk about what makes Bitcoin so special. First of all, let's talk about what Bitcoin did not do. You might think Bitcoin was the first blockchain, but it was actually not. Blockchains were invented by a couple of guys who worked at Bell Labs, which was an R&D facility associated with AT&T that a ton of technology came out of. They invented the transistor. They won numerous Nobel Prizes. They invented information theory. So really, really smart research lab over there. So these guys, Stuart Haber and Scott Stornetta, they invented blockchains, which is just, at the end of the day, it's just a time-stamped append-only database, and it's secured by cryptography. Actually, some fun trivia, and thank you, Victoria, for dropping the Bitcoin paper in the chat. Everybody can check out that by clicking that link. But yeah, a fun trivia fact is the oldest blockchain is not Bitcoin. It actually is published in the New York Times, of all places. So Stuart Haber and Scott Stornetta, they created a company based on their work. And every week in the Sunday edition of the New York Times, they publish a hash code, which is a little cryptographic piece of code. And it's time-stamped because it is in a newspaper, and each issue has a time that it is associated with it. And you basically, the idea is you can't go back and edit old papers, old copies of the New York Times, because the Times publishes its paper, it enters circulation, and you have a pretty strong, resilient system as a result of that. We'll talk a little bit more about how blockchains work, but it's interesting to note that Satoshi did not create the first one. And actually, the Bitcoin white paper does not even use the word blockchain. That was something that came about later on online forums while people were developing Bitcoin. So what did Bitcoin do if it didn't invent the blockchain? What Bitcoin did was it created a consensus mechanism, which is basically a way for a peer-to-peer system to reach agreement on a common record without needing a central trusted authority. Someone, by the way, has asked what append only means. Append only means you can only add to it. You can't go back and change previous records. And this is what when you hear people talk about the blockchain being immutable, it basically means that you can't change it. So append only means you can only add to it. And that's what makes it a blockchain. You have all these blocks and you're adding blocks to that chain, only adding to it, not going back and changing past ones. So Bitcoin created a new consensus mechanism, a new way for computers to agree on a common set of facts, a common record-keeping system. And essentially what Satoshi Nakamoto did was he solved something called the Byzantine generals problem, which is an old mathematical game theory thought experiment that prior to him did not have a good solution. So let's talk about the Byzantine generals problem. Oh, yeah. Okay, so Victoria, by the way, has asked, what is a block? And okay, yeah, so let's talk a little bit about what a blockchain is in the case of Bitcoin. A block is just, at the end of the day, a list of transactions. We talked about, in the history of money, various record-keeping systems and how ledgers were important. What banks do at the end of the day is they basically just keep records of who owns what and who is spending money where. And so you have a whole list of transactions, and each block contains lists of transactions, and they get concatenated together into a larger chain. So basically, the blockchain, in the case of Bitcoin, is just exactly what it sounds like. It's blocks of transactions that are getting lumped together. And now you have, when you look at the blockchain, you can see the entirety, the whole history of transactions that have ever occurred. It tells you, again, who owns what, who owns how much Bitcoin, and who they might be transacting with, where they're spending money. That, at the end of the day, is what a blockchain is. Now, it's got all sorts of other technologies that enable that, and I'll get into that in a little bit. But first I want to talk about the Byzantine generals problem, which is this, as I said, an old math problem that did not have a good solution that Satoshi figured out an answer to. You can click this link if you want to see a good paper about it that was published by Microsoft in the 80s. And Victoria has compared the blockchain to an electronic cuneiform tablet, and that's spot on. That's exactly right. And James has compared it to a spreadsheet that you can add entries to, but can't change previous entries. That is also a great way to think about it. Think about it as an Excel spreadsheet that is just getting, once an entry has been entered in there, it gets locked in, you can only add more to the bottom. But then the question becomes, how do you stop people from, spending money they don't have, from making entries into that system that would benefit them by allowing them to what's called double spend money? That is the essence of the Byzantine generals problem. So let's talk a little bit about that. So say you have a whole bunch of Byzantine generals and they are trying to attack a castle. And now, as the premise of this thought experiment, we'll say that they all need to basically attack together at once. They need to agree on a time to attack. And if they can do that, then they will succeed in taking over and conquering that place. But if they can't reach agreement, they'll fail. So an easy way to begin to think about the Byzantine generals problem is to think about the case when you have a central trusted authority in the mix. So say we have this king over here wearing this crown, and this is the Byzantine king. He wants to tell his generals to attack. So he tells them, he sends his couriers out there with messages saying attack at dawn. They all get the message and they're like, all right, let's do that. Boom, they take over the castle. Everybody agrees, it's very easy, and everybody parties because they took over whatever they were doing there. And this is all because the king over here was able to communicate effectively with all of his generals. But what happens in the case where you don't have a king? What about if you don't have a central authority that you can trust to deliver these messages about when to attack the castle? And in fact, so now you have all these people that need to, so in fact, what if not only did you not have a central authority, but what if you couldn't trust the people who were running the messages? Or maybe some of these generals are not trustworthy either. Maybe they're moles, they're secret agents for the other side. How do you get everybody to agree on a time to attack? It's very difficult because all of these generals are now saying, this one might say attack at 7. He might tell this one attack at 5 a.m., attack in the evening. And in fact, there's just a whole, it becomes a very complicated question. How do you reach agreement on a peer-to-peer network? These generals, by the way, are supposed to be nodes in a computer network. That's the analogy we're working with here. It's very hard to reach agreement, especially when there can be bad actors in the mix who are trying to mess things up. So typically the answer would be it's very hard to reach agreement and they're going to lose because they can't decide when to attack. But what Satoshi Nakamoto did was he developed a system that requires no central authority for peer-to-peer coordination. It prevents double spending as long as 51% of the actors are acting in their own rational self-interest and not collaborating to undermine the integrity of the system. And that is basically the essence of what's called Nakamoto consensus, this thing he invented. Basically lets you solve this problem. It lets all of these nodes on the computer network coordinate with each other. And instead of a king, if you remember, we had that crown up here, that king, the equivalent in the financial system would be a bank. And Nakamoto says, you know what, we don't need a bank to keep trusted records of what we all own and what we're spending. In the same way that we don't need the king to tell us when to attack, we can actually have the generals or the peer-to-peer network decide among themselves when to do it and reach a consensus about it. And the way he did this was through a variety of technologies. I don't want to spend too much time digging into cryptography. If you want to learn more about the various technical innovations that enabled Satoshi Nakamoto to pull off this grand trick, I recommend some of these YouTube videos below. But the essence of it is he used public key cryptography, which was developed in the 70s, which does anybody know what cryptography is? Give me an answer in the chat here. Okay, Victoria doesn't know. Does anybody who's tuned in here happen to know what cryptography is? Oh, look, Victoria said she doesn't know, but she seems to know. She says something to do with symbols and codes. That's exactly right. Cryptography is the science behind writing in codes. So it's about keeping secrets and communicating secrets with people, especially when there are people you're trying to keep those secrets from. Now, if this were a longer class, I could get into the whole history of cryptography, which is a fascinating thing. But if you're interested in that, I recommend a book called The Code Book by Simon Singh. I'll drop it in the chat here. I think that's the author's name. But it's a really good overview of all the technologies that went into Bitcoin. So we talked a little bit about blockchains, time-stamped append-only databases, basically lists of transactions that you cannot alter in the past, you can only add to. Public key cryptography and digital signatures basically lets you have people interact with the blockchain to authorize payments. Hash functions and Merkle trees. I don't know that we want to get into all this right now, but follow up with me too if you have any questions about this stuff. I'm happy to explain in more depth. Another interesting thing about Bitcoin is it relied on proof of work mining. Now, I know one of you said that you wanted to learn more about proof of work versus proof of stake. So we'll talk a little bit about the differences here. But Satoshi used proof of work mining, which actually was from an anti-spam system created in the 90s by a guy named Adam Back. And he developed a system called Hashcash. And the whole idea was you want to have computers spend time and energy trying to solve math puzzles effectively in order to make it harder for spammers to send spam email out. If you make it just a little bit costly to send a spam email, maybe it would reduce the amount of spam email that we got. And Satoshi applied this system in Bitcoin. Basically, it's a lottery system. And the way it works is with hash functions, which I don't want to get into too much, but a hash basically lets you assign a unique identifier, a fingerprint to some piece of data, to digital content, to information. Basically lets you create an address for a particular anything really. Anything that's data you can turn into a hash function. But so you have basically all these computers on the Bitcoin network. They are throwing computer power at mining, and they are rewarded for getting the transactions listed in a correct order and so they're rewarded for all this activity that and energy that they're expending keeping up the network. They're rewarded in Bitcoin. This was a huge game theory breakthrough by Satoshi Nakamoto, was inventing this sort of native token in the network that would incentivize people to throw their computers at supporting the network. Again, if I don't want to get again too much into the history of cryptography, but we can talk more about that if you want to when we get to the question and answer section or later on. But these are some good YouTube videos as well. to give you a grounding. So why does any of that matter? Why do we care about all this crypto that that Satoshi cobbled together into some crazy system? And here's the answer. Digital peer-to-peer money was never before possible. This was something that people had tried and failed to accomplish, and Satoshi was the one who pulled it off. You can take a look at past attempts at creating digital currencies. There are a whole bunch of people who tried to do it, and none of them succeeded, except for Bitcoin and Satoshi Nakamoto. He published his white paper in 2008, but he got the system up and running in 2009. Now, if you look at the end of the Bitcoin white paper, you'll notice a bunch of references to other past work. So can anybody spot which references here are were cited by Satoshi Nakamoto? That's right. Morgan says B money. That's right. That's the first reference in Satoshi's paper. And David mentions Hashcash. That's also right. So Satoshi was drawing on the work of giants. He was standing on the shoulders of giants, of past cryptographers who had tried to pull this off. Now, bonus points. Does anybody see Haber and Stornetta's name? They're cited 3 times here, quite a few times. Does anybody remember what they did? If you were paying close attention earlier, you might remember their contribution. Drop an answer in the chat if you happen to remember what Haber and Stornetta did. David says maybe they invented cryptography. There we go. Jeremy says, look at their work from Bell Labs in the 90s. And Daniela says blockchain. That is right on. New York Times blockchains. That's right. Haber and Stornetta invented what we today call blockchains. So, and they were cited 3 times out of the 8 references that Satoshi had. So clearly their work was pretty important. All right, now we're going to make our own Bitcoin wallets. Okay, so does everybody see this address? I'd love you to click that. Maybe somebody can drop it in the chat for me. I know I've had some helpful helping hands here. There we go. So yeah, everybody visit that link and give me a hand raise reaction on your Zoom video if you, or a thumbs up or something if you've done that. Okay. I see a couple of thumbs ups here. Amy, Trina, Victoria, Jeremy, Candace, excellent. I'm seeing some people who have done it. James and Amanda as well. Great. So if you've done that, you're going to see this page. Is everybody seeing this page? Cool. Basically what's happening is it's generating private keys for you, and it's generating a public and private key pair for you, which are effectively going to be your Bitcoin wallet address and also the password that, or your private key that you want to keep private. So if you move your mouse around, this software is like supposedly adding randomness into the equation to make it more difficult to crack. I haven't audited the code myself, so, you know, I don't know, but it does spit out Bitcoin addresses at the end of the day. You should be seeing, once it completes, something like this. So give me a thumbs up if you have gotten some QR codes and alphanumeric signatures. Daniela has, James has, Jared, Amy, Candace has, great. Trina, okay. Fantastic. So what you're seeing here on the left side, this is your your public Bitcoin wallet. If you have done this, you now are the proud owner of a Bitcoin wallet. Welcome to the blockchain, everybody. This address over on the left side that you can share is, you can think of it like your street address. If somebody wants to send you Bitcoin, they can send it to this address down here. This is something you would, I mean, depending on your level of privacy, you can announce to the world and say like, hey, this is my address. Or maybe if you want to do shady stuff or just keep your privacy to yourself, maybe you don't want to link your identity to your wallet. And that's a whole thing we can get into as well. But over here on the right side, this is your private key. Never share this. Don't tell anybody about this. Keep it secret, keep it safe, keep it private. You never want anybody to get their hands on it. Some people are waiting for it to load. Someone asked, how do you get the QR code? They just have random numbers. I don't know. When I ran through it, it spit out a QR code. But I think it's, I'm sure you could probably find online a way to convert a hash into a QR code. I don't have a link right here and now, but I'd imagine it's a pretty simple process. And some people asked, how do you save it? That's a really good question. Let's talk about security best practices. Yeah, okay, so what we did just now, we created our own Bitcoin wallets. They're called cold storage paper wallets because you can basically write these keys down on a piece of paper and hide them somewhere in what's called cold storage. You know, it's kind of like not connected to the internet. But we were all connected to the internet since we're all on this Zoom chat while we generated the keys. A bunch of security folks would say that's not a good idea to do. You want to generate them offline. So you want to download that software onto your computer, maybe put it on a USB drive, bring it to another computer that isn't connected to the internet, and then generate the keys there. It totally depends on your level of security, but Bitcoiners tend to be pretty security conscious, which is why they recommend doing this offline on an air-gapped computer. It looks like some people are seeing the QR codes show up eventually, so that's good. As I mentioned, you never want to reveal your private address. You want to use strong passwords to secure your addresses. And also, it's recommended that you maybe keep a paper copy somewhere safe, somewhere that you know nobody else has access to. You could keep multiple copies in safe locations. If you're real crazy, you could like split them up in safe deposit boxes around the country, storing it in bank vaults. The Winklevoss twins do that with their Bitcoin. I don't know if you know the Winklevoss twins, but they were the folks that Mark Zuckerberg had a falling out with at Harvard over the creation of Facebook, and then they got big into Bitcoin. You could also buy a hardware wallet like a Trezor or a Ledger. These are the two leading brands of hardware wallets. And that is one of the best recommended ways to have top-notch security when you are doing transactions in Bitcoin. Or if you want to deal with any of that, you could create an account at an exchange like Coinbase that takes care of the custody of your cryptocurrencies and Bitcoin for you. If you're going to do that, I recommend using two-factor authentication. Some people even go so far as to get a separate phone, never telling anybody about that other phone number and tying that to their two-factor. Application-based two-factor is better than phone-based two-factor, by the way. If there are apps you can get that give you randomly generated passwords, that's better than getting a code sent to your phone, since there have been a number of attacks against people who get their codes intercepted by hackers when it goes to your phone over sort of like the SMS cell network. Anyway, so those are security best practices. James asks, is the business model of Coinbase to take some percentage of transactions or something? Yes, that's right. Actually, Coinbase extracts a pretty surprising fee when you are buying Bitcoin. I would have to double check to see if Coinbase levies a fee when you are sending Bitcoin to a wallet address. I don't know that it is, or whether it's just the network itself that you're paying the fees of the network to miners. But yeah, that's right. Coinbase, if you go on Coinbase and you buy Bitcoin, you're probably going to be surprised by how much money they take. And Amanda asks, do people tend to have multiple wallets? It depends. I would say that in Satoshi, like if you read the Satoshi Nakamoto Bitcoin paper, he talks about how people can protect their privacy by having many different wallet addresses. We created one here and now, and you saw how easy it was to create a wallet address. So it is very simple to have many of them. So if you want to, keep your transactions separate from one another, it's very simple to spin up as many wallets as you want. And because of the nature of cryptography and hash functions, which I know we didn't talk too much about, it's effectively impossible that you're going to have two people generate the same wallet, even if you all of us just till the end of time kept on creating Bitcoin wallets. Okay. Let's see. Questions. I've been sort of answering questions as we've been going along the way, but I'll see if I missed any in the chat here. Okay, yeah, Victoria has asked, how do you generate a key on this site if you have to go to the website to do it? I believe there's a way that you can download that code because I think it's like a JavaScript application. I'm pretty sure you can download it and then put it on a USB drive and bring it over to a computer that's not connected to the internet, have it run there. If you want to do this, I can follow up with you after this whole course, and we can figure it out together. I have not done that. So yeah, I probably should to improve my security, but I have not. And Morgan has asked for recommendations for good custodial services for Ether-based assets like NFTs. I would say that you're probably going to want to custody these yourself, custody NFTs and things yourselves. And for those who don't know, NFTs, we're going to get into what that is later. They're non-fungible tokens. We'll talk more about them in a bit, but yeah, I'd recommend having your own digital wallet to custody them. And in fact, if you stick around, we're going to create such a wallet later on. So it's something to look forward to. What other questions does anybody have? If anything's on your mind you want to ask about, from whether it's, we talked already about the ethics of owning crypto in journalism. We talked about a history of money. We talked about the development of Bitcoin and why it was significant. And we talked about how to create your own Bitcoin wallets. So anything that might be uncertain, please drop in the chat. Happy to answer anything else. Okay, we are just a little past the first hour mark here. We've been chatting for about an hour and 10 minutes about all sorts of things, as I just recapped. I'm gonna give us a quick break. Let's all meet back here at 10:15. If that works for everybody. I could use a glass of water myself. All right, so I'll see you in a minute or so, or 5 minutes specifically. Okay, hello everybody and welcome back to our class today, Mastering Crypto, covering Bitcoin and beyond. So for anybody who is recently joining, we have talked about a number of topics so far. We've talked about the ethics of owning crypto as a crypto reporter. We've talked about the history of money. We've talked about the development of Bitcoin. And we have made our own Bitcoin wallets. So if I'm going to assume most people are back. Yeah, I'm seeing folks on screen. I don't know about you, but I needed a break definitely to get some water because we've got a lot more to get through. And it's going to be fun. And we had a question come in. Daniela has asked, were there any attempts at peer-to-peer decentralized exchange of money before the internet? The examples I included were all from, were all digital examples. To be honest, I haven't looked into that. So I would say, Daniela, if you can do some extra homework and you want to Google around and let everybody know, you can drop the answer in the chat. But it's an interesting question. I'm trying to think through how that would even look, but it makes me think it would be very messy to have a decentralized peer-to-peer exchange of money. I don't know that you could keep everybody honest if people have the ability to sort of create their own money out of thin air. But look into it and let us know, Daniela. Okay. We are going to get back to Bitcoin. So we talked a little bit about Bitcoin's significance, why it was an important innovation that enables bankless banking. You don't need anybody's permission to use the money and to get on the network. Another interesting thing about it is you can carry the addresses in your head. So whereas gold is another sort of form of money that is a scarce asset that's outside of the central banking system. If you've ever tried to lug around gold, I don't know if any of you have, I have not, but it's heavy stuff, it's metal. So if you've got a briefcase of gold, it's gonna really weigh you down, whereas you can carry as much Bitcoin as you want, as long as you have that those addresses that we created earlier that you've written down on a piece of paper. You know, a piece of paper is pretty light compared to a briefcase of gold ingots. You can also memorize it and just carry it around your head. That's pretty amazing. Nobody can block your payments. Nobody can censor you on the network unless you have a sophisticated security bug or maybe a 51% attack, which is something we didn't talk too much about. But sort of the beauty of Satoshi Nakamoto consensus is that if everybody acts in the rational self-interest, 51% attack should basically be an improbability because everybody wants to maximize the money that they're making. And the best way to do that is to support the network and to be sort of a good actor in that way. And the other thing that's amazing about Bitcoin is that it's all open source. You can go on GitHub and you can actually see the Bitcoin code. You can see the active development that's going on with Bitcoin. I'll drop a link here, actually. It's kind of amazing. Like you can go check out what makes up Bitcoin here and see all the various proposals to improve it and pull requests and see how the project is advancing and developing. And the thing about technology is it usually improves over time. So that is a pretty strong argument in favor of how Bitcoin could maybe get better in the future. Here is a quick history of Bitcoin's rise. It only, I found this online somewhere, this chart, and it doesn't go to the present day. It only goes to 2020. I mean, a lot has happened since 2020. We've had a whole nother bull run, and now it seems we're in another crash period. We'll see how long that lasts, who knows. But here we can just kind of see some major moments in Bitcoin's lifetime. Satoshi Nakamoto over here creates it in 2008. In 2010, 2 years later, you get the first real world transaction takes place when somebody buys a pizza. Yeah, he bought 2 pizzas for 10,000 Bitcoin. So I don't know what price Bitcoin is at right now, but you can do the math. 10,000 times the price of Bitcoin is a lot of money that this man spent on some pizzas. But back then, Bitcoin was not worth this much. It was worth cents on the dollar. Yeah, the source of this is howmuch.net. So I will drop that here. Oh, there, Jeremy's got it. Thanks, Jeremy. Some other major points in Bitcoin's lifetime, you had a dark underground criminal marketplace called the Silk Road that came about, and it used Bitcoin as the money that operated on it. Now, this seemed like a good idea at the time, but an interesting thing about the blockchain, as we discussed, it's a list of transactions. It's a whole record-keeping system, and much of it is out in the open. It's in public. You can go and actually look at the records. So if you're a criminal trying to hide your activity, it's got some benefits in that people's identities are not associated with it, but you can see the entire history and chain of transactions and what people are spending on. And if they want to convert that money into real like dollars or fiat currency, like the US dollar or euro or something, if they want to actually take that Bitcoin and move it into a usable kind of government currency, it's going to be a problem, because that is the point at which their identity would kind of be totally revealed. So that's a whole set of issues that we could get into too. In 2011, Bitcoin's price breaches the cents mark and actually gets up to being priced to the point where it's priced at $1. 2014, you get Mt. Gox, an early Bitcoin exchange. So how many people are familiar with Coinbase? I mentioned Coinbase in an earlier slide because they're a big Bitcoin exchange. Great, we're getting some hand raises here. Mt. Gox was basically the Coinbase before Coinbase, except they had terrible, crappy security, and they got hacked and they lost a whole lot of money, and the price of Bitcoin crashed afterward. It was a big debacle. And it basically kicked off a 2-year crypto winter, is what they call it, when the price sags low down, crashes for an extended period of time. But then in 2017, you had some new developments that fed into a new bull run. We're going to talk about what those new developments were. The bubble popped, price crashed again, then the pandemic hit, people started liking Bitcoin again because everybody had money to spend from their government payouts, and also people were looking for a risk asset and potentially speculative asset that is not tied to the Federal Reserve's money printing machine. Bitcoiners will tell you that the government is printing too much money, it's causing inflation. I mean, inflation rates are higher than they've been in quite some time. So there's something to that, but Bitcoiners posit that Bitcoin is the solution to that. It's basically digital gold. So crypto investing is not for the faint of heart. You can see the wild swings. I think I pulled this chart last night. Back in 2017, 2018, it looked like a big bull run and crash, but I mean, it was a pipsqueak compared to what we've seen over the past few years, with the price running up and crashing, and now crashing again. So if you are looking to invest in crypto, be forewarned. It is a dangerous game to get into. So Bitcoin bulls, what do they believe? I really like this chart because it shows you, it kind of meshes the history of money that we were talking about earlier with sort of like the advent of Bitcoin. So this chart charts the dominant currencies in the world from basically the Italian Renaissance. It starts out with Florence and Venice. They have the dominant currencies because they are situated such that they can have their merchants exchange goods between the Western and the Eastern worlds. They just happen to be geographically placed in the perfect spot to do this. And so their monies become the dominant ones. Then after that, you get the Portuguese and the Spanish. They are over on one side of Europe and they're like, hey, we need to get around these Italian city-states. So they send ships out to what they think will be a shortcut to riches in the East. And they discover the New World, which is filled with a lot of gold and silver. They get a whole bunch of gold and silver sent back home, and they become the dominant money for a while. And then after that, they spend their money like drunken sailors, and the Dutch and the French and the British develop empires around mercantilism, colonialism, and so there, and pretty sophisticated financial systems and banking systems. So then they have the dominant currency. Then the world wars happen. The US comes out on top of that. And finally, if you ask a Bitcoiner, they'll say, global, these government currencies, they rise and fall, but Bitcoin was created and it's outside the purview of any government. No government can spoil it because it uses cryptography that nobody can touch, basically, nobody can mess with. So it creates this sort of global system that is outside of anybody's reach. And as a result of that, it will prevail as the next dominant currency. That's kind of the big Bitcoin bull thesis. But there are also bears, people who don't think that Bitcoin has anything going for it. Does anybody recognize any of these names here? I sampled some quotes from some people who I don't know if you've heard of or not, but there's some money men. Raise your hand if you recognize any of the names here. Okay, cool. Yeah, I'm seeing some recognition. A lot of recognition, yeah. So Jamie Dimon, head of America's biggest bank, JP Morgan Chase, he thinks that basically Bitcoin is like cigarettes. You got Warren Buffett, one of the most successful investors of all time. He says it's a delusion. Ray Dalio, head of the biggest hedge fund in the world, Bridgewater Associates, he says that it can never be a success because governments will not allow it to be. And his point is basically, if you look back in monetary history, during the sort of the Great Depression era, FDR time in the US, there was a confiscation of gold, actually. The government sort of required people to exchange their gold in. And Ray Dalio would say that this is going to happen with Bitcoin. Basically, if people really start relying on it, the government's not going to be happy with that. And they have guns and a military and make you pay your taxes in dollars, so they can make this happen. And Paul Krugman, he is a New York Times columnist and also a Nobel Prize winning economist. He calls it a Ponzi scheme and a bubble. And these people, they've made a lot of money. So so one would think they know what they're talking about, but they're coming from the traditional finance world. Let's ask, are you a Bitcoin bull or bear? You've heard the bull case, you've heard the bear case. Where do you fall? Maybe you can drop an emoji in the Zoom chat that describes your feelings. Get creative with it. I've put a sampling of different options here. Bulls, bears, rocket ships, some guy, little face vomiting. Sloth, that's a good one. I guess that means that you just have not done anything yet. Victoria, by the way, notes that Warren Buffett used to dismiss tech stocks, but now Apple is the biggest tech stock he owns. It's a great point. Warren Buffett famously says that he doesn't invest in things he doesn't understand. And that is why he has historically been very wary of technology and cutting edge technology in particular. He likes cash flows. He likes old, boring businesses like insurance companies that pay you a very well thought out, premium every month. And then you can use all that cash to invest in other things. He likes boring old businesses that make sense. I'm not seeing too many emojis. I see David's got a bull here, but people are people are using their words, which I appreciate too. James is okay. There we go. James is pessimistic and bearish on its use as a currency. Perhaps James means as a medium of exchange, but maybe there is another area where Bitcoin could prevail. And actually, that's what a lot of Bitcoiners will tell you, is that it's not really a good medium of exchange because the price can fluctuate wildly. So you probably don't want to pay for a pizza with it, because that could end up costing you millions of dollars in the future. Instead, they say it's a good store of value, which is what they say gold is. Gold has historically been a good store of value. And yeah, anyway, so they call it digital gold. Jane says she was skeptical. She wrote a piece about it in 2012. Wow. OG, you were looking at this stuff really early. But she says, so what do I know? Well, the game hasn't played out entirely. We'll see where it goes. It could just be some irrational exuberance in the interim. Let's see. Candace notes that the mayor of New York City, Eric Adams, he's getting his first paycheck in Bitcoin. He picked quite a time to do that, given the crashing prices. Daniela's got a rocket ship. Okay, we've got a whole bunch of people here. Great. Yes, Jane, maybe you should have invested. Okay. So now let's enter the time after Bitcoin. Bitcoin's got some challenges. We talked about some of them with the bear theses, but just the way the network is set up, it has challenges. One is the whole system prioritizes security over flexibility. Now, this is a strength because when you have so much money wrapped up in a system, you want it to be very secure. You don't want it to be very flexible, because flexibility could mean security holes and weaknesses and hacking and all that badness. And because so much money is wrapped up in the Bitcoin system, I don't know what the total market cap is right now. I can look it up quickly. And it's been crashing, as we've mentioned a couple times here. But because you have so much money wrapped up in it, yeah, so it looks like the total market cap is $665 billion right now. So more than $500 billion. That's a lot of money to have tied up in a system. And as a result, Bitcoin developers are pretty conservative. They don't want to rock the boat too much because they've got a lot riding on this thing. And anytime you introduce new code, you also introduce the possibility for things to go wrong. So as a result, there's been a lot of infighting over it. It's been slow technical development. They've had some upgrades. They did one called Taproot last year that had some improvements, but that are pretty minor compared to some of the other stuff that's going on with other cryptocurrencies out there. You've got the environmental concerns. Proof of work mining uses a lot of energy. You have regulatory threats. We talked about the government potentially stopping it, and you've got the constant talking about it being a Ponzi scheme. By the way, for those not familiar with Bitcoin's history, this is a good book that lays out sort of the early days and the infighting that has gone on. So you can take a look at that as well. I see a couple of raised hands. I don't know if people have questions they want to ask, but you can feel free to drop any questions in the chat function over here. And I'll get to them as we go on. Amanda asks, how are the environmental concerns of Bitcoin different from regular computing? We're going to get into that later. So I'm going to put a pin in that thought for now. So Bitcoin has a whole bunch of challenges associated with it. Does anybody recognize this guy? If you do, drop his name in the chat. Morgan's got it. That is Vitalik Buterin. 20-something-year-old scrawny kid from Russia who lives in Canada, or now I guess he travels all over the world. And he invented something called Ethereum. He wrote this white paper in 2013, so a few years after Bitcoin came out. And his whole idea was, what if we created a cryptocurrency that was like Bitcoin, but instead of it being totally optimized for transactions, for a sort of bankless banking system, what if we pulled out all the stops? What if we made it super flexible? If we made it very easy to code up your own applications using it? What if we built in a programming language that was what people call Turing complete, which basically just means that it can do anything a general purpose computer can do, which is to say anything you can dream up in software. So what if instead of a bankless banking system, you had all these nodes that are mining around the world? What if you made it into a giant world computer? It was a pretty wild and crazy idea, but that is what gave us Ethereum. Yeah, so what makes Ethereum different? It's got this programming language that I alluded to called Solidity that lets you have the ability to create smart contracts and apps. We can talk a little bit about what smart contracts are. But you're familiar with contracts in meat space, in the real world, probably. A contract is basically just an agreement between parties. And oftentimes there can be like monetary values associated with that. So an example of like a very simple smart contract would be, say I want to bet that the Tampa Bay Buccaneers are going to win the Super Bowl, and somebody else wants to say that they're going to lose it. We could enter into a smart contract that we code up that basically says that if the Bucks win, it automatically pays out the pot to me. That's just one example. It's a gambling example, but there are all sorts of other contracts you can enter into. I mean, you could have insurance contracts. Say you're a farmer and your livelihood depends on your crop. And if the weather is going to be bad, you want to get paid out insurance, like bad weather insurance, so that you can protect your livelihood should your crops fail or not come out to be what you want them to be. You could code up a smart contract that pays out insurance based on bad weather, and you can do this all on Ethereum. So that's what makes it smart, is that you have these computers that are actually executing the contracts autonomously, automatically. You don't need to have humans in the loop to actually make these contracts execute. You have the computers, they make commitments themselves. And you could extend this so far as to, and this was an early example that Vitalik had put forward, is to have apps similar to the apps you might know and love today, like say Uber, like a ride-hailing app. What if you had a ride-hailing app that didn't have a company, Uber, behind it? What if it was just a piece of software that connected drivers and riders, and it just ran on the Ethereum blockchain out in the ether, as it were, all decentralized? So it's a pretty crazy vision. And so Ethereum had a number of innovations that really allowed it to take off. We saw the price chart of crypto earlier with the run up in 2017, and that was largely caused by some new developments in Ethereum, like the initial coin offering boom, which was enabled by an update to the Ethereum code that let people create their own cryptocurrencies or tokens on the Ethereum blockchain very easily. Actually, back in 2017, I want to say, I wrote a cover story for Fortune where I created my own crypto. I called it pets.coin, sort of as a joke and an homage to pets.com, which was a big tech company back in the early internet days that spent a lot of money and went bust. So anyway, yeah, it's very simple to create your own tokens and coins, and that led to a whole bunch of people doing cash grabs and trying to like raise money online. But it proved out that cryptocurrencies are very good at pooling capital globally. And we're seeing this again now, and we'll talk about that later. And we also had the advent of the non-fungible token, which, so we'll give a little bit of background on that. It's basically a new file type. And I guess the pithiest way to describe it in the way that I think about it is it enables you to own pieces of the internet, to own pieces of digital content online. Non-fungible token, it sounds like a bunch of gobbledygook. Fungibility is a property that is associated with certain things like money. And it basically just means that $1 bill equals another dollar bill. Any dollar bill can be swapped out for another one. They're all the same. And so you wouldn't prize one above another. But what if you wanted to have the ability to prize certain assets more than other ones? People on the Ethereum developers decided that they wanted to have this ability. And so they developed the non-fungible token so that you could create unique certificates that basically allow you to announce your possession or ownership of a particular thing. I put a little photo of a CryptoKitty here, which was a game in 2017 that people, it was really tied up with the invention of the non-fungible token. You could own these CryptoKitties by owning NFTs, tokens associated with them, and then you could breed them and you look for the rarest attributes of the cats. So anyway, that is a little bit of history on NFTs. But Ethereum has problems too. We talked about Bitcoin's problems, and Ethereum has problems as well. And so there are Ethereum killers that are trying to basically offer alternative blockchains that have lower transaction fees, that are faster than Ethereum. And there are endless arguments about, whether these systems are adequately decentralized enough, or, their various failings or advantages. So there's, we could talk for days about the various tribes in the crypto world who are supporting various cryptocurrencies and saying one's better than the other. I put a few photos down there of them. Ethereum's price has gone up and down. Recently, it's been tanking. But if, like me, what you're interested in is sort of the time and attention paid to crypto, that stuff is just on the rise. I mean, even as the price is tanking, people are talking about it more than ever. And if you are a reporter or a journalist, this is your ace in the hole, basically, I would say. Frequently, crypto stories are the most read stories widely on different sites. I know that was my experience at Fortune, but there is just an enormous bottomless appetite for stories about crypto because people are trying to understand it. And so people are constantly looking things up about it, which means that if you are trying to get into this world or write about this stuff, you're going to have a receptive audience there. And likely, I mean, publications are hiring like crazy right now for this because they see the demand in that audiences want to read about this stuff. So you're in a good spot, you coming to this class. We have a whole bunch of different cryptocurrencies here. We can talk about them. We have stable coins. Someone in the chat had mentioned that they think Bitcoin maybe isn't great as a currency. And other people noticed that too. And that's why you had the advent of things like Tether over here and USD coin over here, which are dollar pegged cryptocurrencies called stable coins that basically are better for, you could say, payments because you're not expecting the value to fluctuate wildly like you would with other cryptocurrencies. We see some of the Ethereum killers like Solana here. We see, of course, Elon Musk's favorite, Dogecoin, number 11. I took this chart. This is by market cap, by the way, in terms of, but as we know, the markets have been tanking. So I'm sure the numbers are all different than what I have here. Someone wants to know my brief thoughts on Ripple. I am going to decline to answer that. My apologies. I would love to share more thoughts, but like I'm pretty sure Andreessen Horowitz, my company, the company that I joined, is an investor in them, and they're going through lawsuits and stuff. So I'm gonna just. But you can read stuff I've written about them. Go look up my byline on Fortune and with Ripple, and you can see my thoughts. So feel free to check that out. Somebody asked, what are your thoughts about public companies investing shareholder money in Bitcoin and the possible outcomes of this? This is a fascinating trend that's been taking place in the business world. Coinbase obviously has Bitcoin on the balance sheet, but others do. This company, MicroStrategy, has been buying Bitcoin like crazy using debt. It's been raising debt to buy Bitcoin. Michael Saylor, the head of MicroStrategy, by the way, was on the first ever Fortune 40 under 40 list back in like the go-go internet days a long time ago. And he faced a reckoning. He lost a lot of his fortune, and he has made a comeback now as a sort of Bitcoin messiah. So he's a true believer in Bitcoin. We'll see how the strategy pays out for him. I don't know if you know that meme from the movie Dodgeball, where Jason Bateman says that's a bold strategy, Cotton. We'll see how it pays out for him. It's basically my thought on that. Jack Dorsey has been a big Bitcoin believer, and he's been buying Bitcoin at his fintech company Square. Jack Dorsey is the founder of Twitter, but he recently left Twitter. He was its CEO, but he's left to focus on Square full time. And actually, he now is calling Square Block. It changed its name because that's how much he believes in Bitcoin and the blockchain. So yeah, there are lots of companies that are looking at doing this. Tesla has done it as well. My old colleague Sean Tully at Fortune has written a lot on this subject. He is quite skeptical of putting Bitcoin in your balance sheet, namely for one specific reason. The accounting rules around Bitcoin require you to log it as an, I think the phrase is an intangible good, something like this, where basically if the price tanks, you have to realize a loss on it. But if the price appreciates, you don't get to like say that. So basically, you're going to be putting out, because you're tying your fortunes to a volatile asset. You're going to be my old colleague Sean Tilley's argument would be that you're going to be upsetting Wall Street because they're not going to be able to predict your proper valuation because the price is fluctuating so much and you have to keep realizing losses. So it's interesting, but as a business reporter or a crypto reporter, companies putting Bitcoin on their balance sheet is a super fun topic to write about. I expect it's a trend that's going to continue, but who knows? I mean, it's anybody's guess. Okay, we're going to create our own digital wallets. We talked a little bit about Ethereum and what makes it interesting and different. I don't know how many people here have Ethereum wallets already. Maybe give me a thumbs up if you have a digital wallet for Ethereum. David's got one, Morgan's got one. Victoria's got one, nice job. Okay, yeah, so we've got some people who have them, but for people who don't, I wanna walk you through how to get one. So I'm gonna send everybody to this link. This is the most popular digital wallet on Ethereum. It's called MetaMask. So if everybody would click that link, you should be going to a page that looks like this. You can click download now and install. if you have one of these browsers. I'm using Chrome, so you can download it as an extension on Chrome as well. And you'll see a little fox pop up over here in your extension bar. So, okay. All right, so give me a thumbs up if you're doing that currently. Okay, we've got some folks doing it. Candace is doing it. Amanda's doing it. Awesome. We've got Bitcoin wallets, and now we're going to get Ethereum wallets. There's a lot you can do with an Ethereum wallet. An Ethereum wallet is basically your passport to Web3. MetaMask in particular is, again, it's the most popular digital wallet that people use. I'll go over security best practices as we talked about with Bitcoin as well. So if you don't use a password manager, I highly recommend getting one. Here are 3 that you can download in your own time. LastPass, I believe, has a good free option that people can use. Dashlane has a free option, but it's a little bit more restrictive. You can subscribe for, I don't know how much the subscription is. It might be like $100 a year, but I got to tell you, subscribing to a password manager is the best decision I ever made. So highly recommend it. It just removes all the headaches about remembering and creating strong passwords, and all that just goes away. And since this is a journalism course, you can also check out 1Password, which offers to working journalists I believe it's a 5-year free subscription to it. So that's definitely worth checking out. So yeah, Password Manager can help you generate a totally random, strong password. And it also can help you store other things you might want. You know, somebody who's very into security would say, don't store your MetaMask seed recovery phrase in there. I know people do. So the best practice, if you have gone along and downloaded MetaMask, is to write down your secret recovery phrase somewhere on a piece of paper and put that in a very safe location. Maybe you want to put it in multiple locations so that you know you can always retrieve it if you need to. But the key thing to remember about that is if you've downloaded MetaMask, this secret recovery phrase is your master password. Anybody who gets access to that 12-word phrase can get access to your crypto. So you want to guard that thing like crazy. You do not want people to get their hands on that. And just a word to the wise, always beware of imposters and scammers and fake websites out there. People are always trying to hack you and get the better of you. So never share that secret recovery phrase with anybody. Okay. And somebody, Victoria here has asked, playing devil's advocate, what if somebody hacks the password manager sites? That's her concern. It's a very valid concern. I mean, we see all of these websites getting hacked, data breaches happening all the time. But what I would say is, if you are storing strong, unique, random passwords in the password manager, the way that it stores them is it stores them locally on your computer, but also it uses cryptography and it uses hashes. And I know we didn't talk too much in depth about how hashes work, but the idea is that even if somebody were to hack the password manager and get access to the list of hashed passwords that are there, they wouldn't be able to turn that into the actual passwords themselves. And so you're actually protected pretty significantly by that defense. It's effectively impossible to turn a hash into a password to reverse engineer from a hash to a password. So you're pretty safe. That being said, there are things online called they're called like rainbow tables. And anyway, people have hacked enough passwords that commonly used passwords people know the hashes of. But if you're using a solid like random alphanumeric, chances are that you're going to be really safe, even if the password manager gets hacked. Anyway, so I used to cover security for Fortune before I moved into covering cryptocurrency. And if I have one tip, even as a security reporter covering hacks all the time, it's get a password manager. And Amy has asked, if something happens to you, how could your family get access to your crypto? Another great question. A lot of people haven't thought this through. They haven't thought through their estate planning. You might want to put it in a place where maybe you could give your family directions to access that seed recovery phrase. Maybe you give them a break glass in case of emergency kind of like note that they can open up a locked filing cabinet where you store it, or get into a bank vault that you've put it in. Or maybe, I mean, it all depends on your level of security that you want to do here. But it can be a good idea to think about what might happen should, God forbid, somebody pass away and not be able to access funds. It's good to plan ahead. I've been answering questions as they've been rolling in, but what other questions are out there? Please don't hesitate to ask. You can drop any questions in the chat over here and I'll attend to them. I think we've been, and thank you, Jeremy, for putting the 5-year free 1Password subscription in there. I think we're pretty set on questions here, and we're hitting 11 o'clock. So I'm going to take another quick break with all of you. We can come back at 11:05. So we'll do another 5 minutes, and I'll see you back here soon enough. Okay, hello and welcome back, everybody. Good to have you here. I'll give everybody a second to settle back in. Yeah, Catherine has asked, what reliable sources are there out there in crypto? And how can you avoid people pumping their own investments? Great question. You have to be very wary of who you're talking to in crypto because you don't know always what their agenda is. But in the crypto world, oftentimes people celebrate having what's called skin in the game. And so if you're trying to write objectively about something, you might want to make sure that you're not just talking to somebody who, say you're writing about Bitcoin, you might want to talk to somebody who's not like got hundreds of millions of dollars locked up in Bitcoin, or talk to somebody who might have another sort of opinion. I'd say academics are usually pretty good. And there are researchers out there as well who cover this stuff. The best source, I would say, is Twitter, honestly. Crypto Twitter is what people call it, CT for short. But basically everybody in the crypto world is hanging out on Twitter 24/7, talking about all this stuff. And you can learn a ton just reading threads that people post and tuning in and eavesdropping on the various fights that break out online. It is an endless source of information. And in terms of other places people could keep up to date on crypto developments and crypto news, yeah, there is a vibrant world out there of crypto media. Everything from the more mainstream publications like Fortune. I created a thing called The Ledger when I was there, which is a newsletter that kind of rounds up everything happening in the crypto world every week. And also has a column at the top that kind of weighs in on something happening in the world. But there are also plenty of, I would say CoinDesk is probably the most comprehensive site. They don't often always go totally in depth on everything, but they are very comprehensive. They pretty much make sure they cover all the happenings. There are more advanced and specialized places you could turn. There's a tool called Masari, which I don't know if it's possible to get a subscription for free. If you're a reporter, you could look into it, but they have pretty good researchers there. And they publish reports that are pretty valid and interesting. The Block is great. They're breaking tons of news about things in the crypto world. I believe you might even have a Block reporter here. Yes, Decrypt. I've got a couple of friends who actually run Decrypt. Both of the people who are at the top of the masthead are former Fortune folks. Dan Roberts is the editor-in-chief, and Jeff Roberts is the executive editor. And Jeff and I founded the Ledger together over at Fortune. And there are tons of newsletters too. I can probably round up a variety of sources and send them out maybe after the class, things that I like. Cool. And Sarah has noted that the career office has relationships with CoinDesk, Decrypt, and Fortune. So that's great if you're looking for potentially getting to this as your career or making a move. Daniela has noted that following El Salvador's president is enlightening because a lot of people are weighing in on his decision to purchase Bitcoin on behalf of his country. Anyway, yeah, okay, so that's some sources. But I can also follow up with more later on as well. Okay, so we're gonna get into Web3 in this next part. And I'll do a quick history of the web. We don't really need to go into depth here. Basically, you could suffice it to say that like the internet came about, and then Tim Berners-Lee in 1989 had the idea for a World Wide Web of hyper hyperlinked hypertext media, basically information that you could link and display over a computer network. So the first version of the web, it was Web 1. You might be seeing people talk about this online a little bit. There's somebody at my company, Chris Dixon at Andreessen Horowitz, who's an investor in cryptocurrency. And this is his framework that I'm kind of like laying out here. You could have qualms with it, but this is kind of the way that we think about the world. So yeah, Web 1, 1990 to 2000, you've got, or 2005 or so, whatever, the timeframes are a little bit fuzzy. But the first web was basically read-only. You had internet portals like Yahoo, like MSN.com, America Online, and they were basically just displaying information, and you could go read news, you could go find health information or look at stock prices, but it was really read-only. It was basically like a facsimile of what existed in the physical world, just posted online for you to look at. After that, you had the development of Web 2, which for the most part pretty much defines our internet experiences today. During this phase, you had the development of read-write. In other words, you could read information online, but you could also have participation. You could actively engage and interact. The way to think about this is you could upload videos to YouTube. You could put photos on Instagram. You can comment on people's Facebook posts. You have this ability to basically, users have the ability to interact with these services and actually create user-generated content. But the thing that made this possible was these internet companies. They created centralized services, and the trade-off was, okay, we're going to give you this free service, like you'll be able to look at all these videos online, but as a result, we're going to suck up all this data and information about you and try to monopolize your attention so we can make money off of it. And so the free service was basically not free. I mean, it was an exchange for assets of yours, your attention and data that they could monopolize and capitalize on. And if we look today at the largest companies by market cap, a number of them are giant tech companies that do just this. So in a very short period of time, Web 2 platforms have basically taken over the world, you could say. I mean, Apple is the most valuable company, but you've also got Amazon, Google, Facebook, Tesla in many ways. I mean, it's collecting data on all the cars out there. You could include that one in the mix. Microsoft owns LinkedIn and various other properties. But yeah, so this has been a very effective strategy for businesses to become giant platforms that control data and monetize it. But that has been, if you talk to somebody like myself or other people I work with, they would say that this was kind of a rough trade because the users who are generating all the content are not getting to see the economic upside of their contributions. And so enter Web 3. You have this new web where you can not only read and write, but you can actually own various parts of it. You can own digital content out there. Here's just like a whole list, photos of all these different crypto tokens and icons and whatever. So it's just meant to represent this new world where you can actually have ownership through those wallets that we downloaded earlier. We have a Bitcoin wallet, we downloaded MetaMask, and there are other wallets you can get, but you can actually own things online. And over here, I put this in here because last year I wrote a cover story for Fortune that we made into an NFT and we sold it. So basically we gave people the ability to buy digital copies of the magazine, and Fortune raised a couple $1 million doing that. And we actually used the money, we gave a bunch of it to some journalistic nonprofits, and they sponsored awards with it and things like that. And this cover, by the way, is just meant to signify various crypto projects. And you might notice big Twitter avatars here and icons and logos for different projects. There's a Bitcoin guy back here and Ethereum stars in the background. MetaMask is over here, the fox. Anyway, just like a fun little representation. We tried to like celebrate the community, and it went over pretty well. People liked it. So that is the history of the web in a nutshell. You had Web 1, read, Web 2, read, write, and Web 3, read, write, execute, or read, write, own in our framing. Victoria notes that she wishes the whole industry could save itself from Google and Facebook by selling articles as NFTs. Yeah, that's a dream. I mean, we're entering this new world where you can monetize things online in a way that you could not prior. And I think that media companies drew the short straw in this trade-off with big tech platforms. And we've sort of been led to believe that our content is worthless and that we should just sort of put it up for free and let anybody have access to it, and we'll sell ads against it. But the media companies, they can't really compete with the duopoly of ad monopolies that are Google and Facebook. And so, I mean, I got to say, one of the reasons why I'm so interested in Web3 and in crypto at all is because it provides this out, this way to value digital media that we just did not have the ability to do before. You know, as we saw with the Fortune cover, like it worked out pretty well in Fortune's case, and I'm hoping there are going to be all new sorts of business models that arise because of this this new ability we have online to kind of like own things. So let's go into some keywords about Web3. One is the DAO, D-A-O, which stands for Decentralized Autonomous Organization. The joke is that a DAO is just a group chat with a shared bank account. You can think of it like, you know, you probably have a group chat running with your family or your friends or something. Now imagine you had money you could spend and vote on as a result, you know, in that system. People often coordinate DAOs through Discord and Telegram. There are a couple of chat apps. And usually what kind of unites a DAO is everybody owns a particular kind of token, and everybody's kind of working together to make that token more valuable. I put a couple of examples here. Friends with Benefits is one DAO. It's sort of like this exclusive club, cool kids club of artists and creators. And Pleasure DAO is a group of people who invest in and collect non-fungible token assets. You can see they actually, Pleasure DAO bought the Fortune cover over here. And we held an auction where like the winner would have their face on the cover. So anyway, they own the Doge meme as well. And so they put the Doge meme on the cover. So I mentioned non-fungible tokens. What are they? NFTs are digital goods. They're digital goods and they are scarce assets. They can basically inject scarcity into the online world. Now, we're familiar on the internet with the ability to kind of infinitely reproduce information, to copy and paste things everywhere. But what a non-fungible token does is it creates a certificate of uniqueness. And that certificate of uniqueness is embodied in a token on a blockchain. And you can link any kind of digital media to an NFT token. And it can represent all sorts of things, from artwork to in-game items, virtual land, e-tickets. You know, here's the Crypto Kitty from earlier, that game we talked about. Here are some Crypto Punks, which are computer-generated avatars that have become popular on Twitter. Axie Infinity is a big game that people buy these Axie creatures and they battle them and breed them together, and they're all represented by NFTs. You also might remember the artist Beeple sold his artwork for a collage of his artwork for like, I forget, $69 million or something. And the people who bought it created a virtual museum in a place called Crypto Voxels, and they put up his artwork in here. You could go visit it online. I actually read a fun story. Somebody like did a for some art publication, did like a first person walkthrough of going through the virtual museum to see people's artwork. The graphics are kind of crappy, but anyway, this is what people talk about when they talk about the metaverse that we're all going to be living in. This is like an early, maybe it's the Web 1 attempt of it, sort of like a facsimile of what we might be familiar with a museum in the real world, just kind of transplanted online. And by the way, stop me if anybody has questions about this stuff. I'm going to probably have to pick up the pace a little bit because we've got some stuff to get through. PFPs are profile pictures. This is an early use case of NFTs. Bored Apes, you've got a bunch of celebrities buying these monkey cartoons and making them their avatars online, and they're buying them for like lots and lots of money. Twitter, you may have seen recently, enabled people to upload verified NFTs as their profile pictures, and you get a hexagon if you do that. So this has been like a thing that's happening. You might be seeing hexagons all over Twitter now. Catherine asks, why are metaverse or Web3 vestibules or entry areas so valuable? It's a good question. I mean, it's basically, if you're talking about these virtual worlds like Decentraland, like crypto voxels, the idea is you have land speculators who are just thinking that this universe is going to become something that more people spend their time in, as like we spend more time online, and as virtual reality gear and augmented reality gear gets more pervasive, that we're going to be kind of plugged in and live our lives online. And so they're just sort of speculating that these projects are going to take off, and they're paying a lot of money for it, for land rights in those areas, or the equivalent of land rights. Decentralized finance is banking without banks. You can basically, you have software that is allowing people to borrow, lend, save, insure, do all sorts of things. There are a whole bunch of different projects that you can look at. Yield farming is this term. Basically, people are like putting their money in DeFi projects in order to maximize their return. They're chasing the highest yield possible. I like this chart because you can see the traditional finance stuff on the left and the decentralized finance stuff on the right. So you can see things like over here, you have the New York Stock Exchange. Well, what is the decentralized equivalent? It is Uniswap, this unicorn logo over here, which is basically doing what Coinbase does, except without having the company Coinbase. It is just software that runs out in the wild on the many computers that make up the Ethereum network. And you have a bunch of other equivalents here as well. You can see MetaMask is kind of like the PayPal of the Web3 era. You have like Compound, which lets you earn interest and take out loans, borrow money, and earn interest on stuff. So there's a whole like basically alternative finance system. Source of this DeFi chart, good question. I found it online. I should find out the source for it. I'll follow up with you about that, but you might be able to just kind of maybe just enter some of these words in Google and click image search. I'm sure it'll turn up. So the wonderful thing about blockchains is that so much of the data is public. Now, this is a huge benefit if, as a reporter, as a journalist, because so much information is out there that you can just look at. It's all transparent. So let's talk about tools. I've got some basic tools just to kind of get out of the way. We talked about Twitter. Everybody hangs out on Twitter. Reddit is similar. There's all these subreddits devoted to different groups. I've used that for stories that I've written. There was a forum about Dogecoin that I dropped into when Elon Musk was appearing on Saturday Night Live. Everybody thought he was going to like pump Doge. And, I found people who basically lost their shirts because the price of Doge tanked. And it's just a very valuable place to source up and get information. Password managers, we talked about why they're useful. Discord, we talked a little bit about. Most of the DAOs, the decentralized autonomous organizations, they use Discord It's become kind of like the watering hole of crypto. A lot of, or the water cooler rather, for if a DAO is kind of like in a company or an office, like an internet native company, then Discord is their virtual office. MetaMask is the wallet, it's your passport to Web3, and GitHub is where a lot of the source code is hosted. Victoria has asked, only Ether or Ether-based tokens can be used for DeFi, not Bitcoin, is that right? It's not exactly right, no. Bitcoin can be used in DeFi. In fact, a lot of DeFi is based on lending and borrowing Bitcoin and earning interest on the Bitcoin that you put up. But a lot of the tools are built on Ethereum because Ethereum allows you to build applications very easily. You can create contracts on Bitcoin, but they are much more limited and restrictive and harder to, like I said earlier, it's much less flexible to use Bitcoin. So even if you are using Bitcoin in DeFi, chances are you're using it on an Ethereum-based protocol, or maybe a separate protocol that is, I mean, there's been a proliferation of protocols. So all these projects, they have their own kind of software that they're developing, and interoperability is an important concept of like enabling you to use different blockchains, different cryptocurrencies on these various protocols. We can talk a little bit about that more in a bit. I want to walk through some more advanced tools. Jeremy has noted, by the way, that Clubhouse was a big hub for crypto conversations. There's still conversations happening. Twitter Spaces as well. These are good places to, yeah, as Candace notes, Twitter Spaces has attracted a lot of the crypto conversations lately, especially when it comes to NFTs. The NFT world loves to get together and talk about aping in, or what's rare, what looks rare, and it's a crazy world out there. But yeah, you can tune in on these places. So yeah, this is one of the more basic advanced tools. When I was reporting on crypto full time, I used this stuff every day. CoinMarketCap, CoinGecko. These are tools that let you quickly check the price of various tokens, see the leaderboard, what the market cap is of them, see the circulating token supply. So this is a very useful tool to just get a quick idea of what's happening in the markets at any given time. David notes that you can use Coinbase as well. Coinbase is another great tool. You can find the prices of various assets on Coinbase. I just, for whatever reason, I like the layout of CoinMarketCap. I think Binance, which is a Coinbase competitor, bought CoinMarketCap. You can even check out how the exchanges are doing. Like Binance has the most volume activity. They also own CoinMarketCap. They're being investigated, I think, for not having appropriate protections against fraud on their platform as well. There was a big Reuters story this week about it. Yeah, David noted that Coinbase's user interface isn't wonderful. Yeah, I just happen to like these interfaces. I find them good. Block Explorers, another tool that's pretty useful. You can check out all sorts of more detailed information. Here's a Bitcoin block explorer and an Ethereum one. So for instance, you can check out what are the transaction fees on the network. In other words, how much money do you have to pay in order to be able to send Bitcoin to somebody else? You can see that it has fluctuated quite a bit over time. It depends on how many people are using the network. Same thing over here for Ethereum. You can check out the transaction fees. It has spiked and subsided depending on the network usage. You can see the different miners and how the big mining pools in Bitcoin. So who is these basically aggregate people who are mining Bitcoin into one big pool, and they do a revenue sharing agreement. So you can see how much computing power people are throwing at Bitcoin. Looks like somebody's having trouble getting the Bitcoin Explorer to load. Keep trying. I'm sure it'll work. And then over here, you can even see like where nodes are. So Ethereum nodes, you can see how many Ethereum nodes are out there. There's thousands. The United States has the most, 763. And you can even see in the US, like where are the Ethereum nodes? There are 102 here in the backyard of the Craig Newmark J School in New York. So that's pretty cool. Let's have an activity. Let's view Satoshi Nakamoto's wallet. We can do this with a block explorer. So yeah, if you click on this link, it will bring you to Satoshi, the first ever wallet created on Bitcoin to receive a transaction. It received 50 Bitcoin. The reason why it has more than 50 is because people have been sending it Bitcoin. It's received various donations from other Bitcoiners who just decided to like send money to the first wallet that ever interacted on Bitcoin. Yeah, so I mean, this is pretty cool. You can like go in and actually look at people's wallets, see how much they own. You can see what they've been doing. You can see all their transactions that they've had. It's a pretty powerful tool. You can also see the first ever Bitcoin block that was mined, which was mined in 2001, January 8th, sorry. And yeah, at that time, the Bitcoin reward was 50 Bitcoin for solving the puzzles, for winning the proof of work mining. I think now it's like 6 Bitcoin or something like that, because the reward decreases over time. Oh yeah, David, this is a great point. He asked, why shouldn't Satoshi have more Bitcoin? You know, he originated this thing. Shouldn't he have thousands? And that's right. Satoshi liked to use, to return to a point somebody brought up earlier, he liked to use lots of different crypto wallets. So we are only looking at his first crypto wallet, but he had many, many of these, and you can do some archival digging to try to figure out which ones were his. But yeah, it's, I forget how much of the network he owns, but if, and I'm saying he, by the way, apologies, like it could be a woman, it could be some amorphous hacker group, I don't know. But Satoshi, yeah, it's believed that Satoshi owns a significant amount of Bitcoin and probably worth billions of dollars. But yeah, spread across many different wallets. Okay, yeah, so this is a pretty big topic in the news, Bitcoin energy data. Bitcoin uses a lot of energy, and the best resource for this is the Cambridge Center for Alternative Finance's Bitcoin Electricity Consumption Index. You can follow this link here. I'll drop it here. So yeah, you can see how much power Bitcoin is demanding over time from 2017 up till today. You can see how it's been growing. You can see somebody asked this earlier, how does it compare to other computers and sort of industrial activities? And you can actually see right here, Bitcoin is right over here. This is how many terawatt hours it consumes worth of power. And you can compare that to like air conditioning or the chemicals industry or TVs in the US. So it's about double like television electricity usage just in the US, not abroad. But this is like a great way to kind of get an understanding of how much power Bitcoin consumes. And you know, Bitcoiners will say, well, Bitcoin critics say it uses so much power, and Bitcoiners would say like, well, all that power is going towards securing the network. And by the way, compare that to like how much energy usage, you know, all of the banks in the world use up on their many, they have huge workforces and so many offices and computers. And so anyway, you can kind of get like a comparative understanding of how much energy Bitcoin's using. And you can also compare it to countries. Right now, it is sucking up more power than Ukraine, but less than Egypt. Amanda has asked, but is it somewhat unnecessary usage? Maybe you could clarify that question. Do you mean like, what is it in this case? But anyway, yeah, so Bitcoin energy usage data. Here's another tool that I find very useful, DeFi Pulse. So we talked about DeFi means decentralized finance. And this website, oops, sorry. This website lets you take a look at the top DeFi projects out there. You can see how much money is locked up in the protocols. I took this a few days ago, so it's probably dropped, but it was nearly $100 billion locked up, which would make it like a top, if you combine all of these DeFi projects together, it would make it like a top 50 bank in the world, which is pretty remarkable given how early days we are in the development of this technology. For instance, you can see like how much money is locked up in Uniswap. We talked about Uniswap a little bit. They're a decentralized exchange, basically doing what Coinbase does, allowing people to trade crypto, but without having a company behind it. And so you can see how much money has kind of like risen and fallen over time there. Maker makes a stable coin. We talked briefly about stable coins, how they're used for payments. Usually it's pegged to like a fiat currency, typically the US dollar. So it's like a good way to be able to transact with the ease and global nature of cryptocurrency, but to use something that's kind of like reliably valued, like a US dollar. We talked a little bit about Compound, lets you lend cryptocurrencies and tokens and borrow them, and you can earn interest on things. Yearn does that as well. So anyway, there's a whole bunch, basically, again, a whole alternative financial world. And Jane asks, if it's tied to the dollar, what's the point? Why not use the dollar? She's talking about stable coins here. One reason you might not want to use a dollar online is because maybe you want to have a system that is automated in terms of you can set up smart contracts that let you enter into agreements online and create sort of a self-running system. And all this stuff it works best with crypto assets natively. If you have like a dollar bill, I would say in PayPal, it could be hard to like put that dollar toward the DeFi universe, but I know PayPal is actually getting into this stuff because they see a lot of potential in it. And Catherine asks, to what degree will this alternative financial world be regulated, if at all? Can it? I suspect, yes, it will be regulated. Right now, we're in a little bit of a Wild West period. The technology has outpaced government's ability to get a handle on it. But I imagine we're going to see legislation passed, and hopefully it's like smart legislation, kind of like the legislation that enabled the internet to flourish, rather than kind of handicapping it. But we'll have to just wait and see to find out. But there's it's a good open question, and it's one that my colleagues fret about often. Is what is going to happen in the regulatory environment. Yeah, anyway, so more stuff here. DApp Radar is a useful tool. It lets you actually check out the usage of these various projects. So you can see, for instance, how many people here are familiar with OpenSea? Raise your hand if you, or give me a thumbs up if you know about OpenSea. They are an NFT marketplace. They're basically like the eBay of NFTs. So you can buy and sell these things on their marketplace. So you can see how many users they have over like a 30-day period. And I think that they use the term users on DApp Radar, but it might be wallets. So like they could be overstating the numbers here in terms of like, one person can have multiple wallets. But you can get a sense of how popular various projects are by looking at DApp Radar, seeing how many wallets are kind of interacting with them at any given time. NFT market data, here's a bunch of tools that can help you understand this market. Crypto art is like a leaderboard. You can see the top, sales for crypto art. Non-fungible is basically like an X-ray of the NFT market. You can see how much trading activity there is, how much people are spending. You can see how many sales there are of various NFT projects. And on OpenSea, you can kind of like go in and actually see the assets up for sale themselves. You can like see how much these monkey cartoons are selling for. I think that one says that the minimum bid is 200 Ethereum. So if Ethereum's like $2,000, that's like, yeah, you can do the math there. Monkey cartoons are selling for lots of money. With Tally, this is a pretty cool tool that might be worth getting to know. It lets you look at the governance of these projects. So one of the really cool things about this Web3 world is that instead of the Web2 world, where you had all of these large internet tech companies and they are calling all the shots, making all the decisions about the products that they're putting out. Instead of that kind of situation, in the protocol Web3 world, you have token holders who get to vote on the direction of the projects. So actually the users and the network participants and the token holders are getting to call the shots. And you can use Tally to check out what proposals or what like projects have active proposals that are undergoing a vote at any given time. You can see how many people are voting. If you look, you might see pretty shocking engagement levels that are not good. So kind of like we have with democracy today, there's apathy or people just don't go out to the polls to express their view. So this is a really cool tool. You can see like how people are voting and who has the biggest sway in votes. Yeah, it's really cool. Anyway, Jeremy asks, are the votes about technical details of the platform, or what are the kinds of things they're voting on? Great question. Yes, it is about technical things. Often you're voting on code updates that are going to be applied, so updates to the software of these various protocols. And that can handle all sorts of things. Like if you're in Compound, maybe you're voting on like the parameters that set the interest rates for lenders and borrowers. Here, I put here an example of a controversial vote. Uniswap had a vote on something called the DeFi Education Fund. They basically wanted to carve out a bunch of money to create an education fund that would like help regulators and policymakers. The money would be spent to help regulators and policymakers understand crypto more so that they wouldn't like take a drastic regulatory measure that wipes out the whole market. And this was pretty controversial because a bunch of token holders said that they felt like the proposal didn't have enough specifics about how the money would be used. Whereas the for side said like, you know, we're coming under regulatory threat. We need to like just throw money at this problem. And we need to do that sooner rather than later. So it was a pretty contentious vote. There were a bunch of stories written about this. You can look up online. But yeah, so there are these wars going on of competing interests within these projects, and it's a huge source of like potential story ideas. On-chain analytics, Dune Analytics is the leading, I would say, tool that blockchain researchers use. I'll drop a link. So it's a little bit hard. I put it as one of the last tools here because it's harder for laypersons to use because you need to know a little bit of computer programming, this language called SQL, to run queries. That being said, you can actually lean on a dashboard of tools that other people have created on Dune Analytics so that you can, you don't have to like code up everything yourself. You can like use stuff that other people have created. And you can look at all sorts of things. I mean, this is like a really powerful tool where you can just get like X-ray vision on all the different blockchains. And here is one example of a story like you could pursue using Dune Analytics. So a bunch of you said that you're familiar with OpenSea. Well, there was another NFT market that launched just a couple of weeks ago called LooksRare. So maybe we're interested in knowing how is LooksRare doing compared to OpenSea. And you can look at the volume. Somebody here, Richard Chen, has helpfully provided a dashboard that you can click on and it opens up. And you can see the daily volume on LooksRare versus OpenSea. LooksRare's volume, even though it's just a couple weeks old, is blowing OpenSea out of the water. They have, commonly $600 million worth of NFTs transacted on their platform a day, whereas OpenSea frequently has 200 million. Yeah, and David says not to be confused with super rare or rareable or one of the many other NFT marketplaces that uses the word rare in the head. So anyway, you've got this big disparity. A lot of volume is trading on LooksRare, way more than OpenSea, and it's so young. So like, what's going on here? Well, maybe we want to look at the number of users on the various platforms. And if you do that view, you can see that LooksRare has the tiniest fraction of users that OpenSea has. OpenSea has about 60,000, whereas LooksRare has like, I don't know, is that 1,000 maybe? So what this tells you is that there is a very small number of wallets on LooksRare that are trading big sums of NFTs. So I might look at this and say, what's going on there? That seems really fishy. Maybe there is wash trading. Wash trading is this idea that like, I own an NFT and I sell it for $50 million to another wallet that I own. And I just keep trading these NFTs back and forth between wallets that I own. That seems to be what's happening on LooksRare. Just kind of self-dealing wash trading. And you can use these tools and just look at the blockchain and figure it out yourself and then pursue stories based on it. It's a really cool ability you have here. By the way, why would somebody be doing this? Why would somebody want to trade an NFT back and forth between wallets they own? Well, the reason has to do with the incentive structure of LooksRare. They make it such that the more you transact, the more token rewards you're entitled to. And so basically these wash traders are trying to game the system by like putting a lot of volume out there. They're trying to trade a lot so that they get like kickbacks in LooksRare token that they hope is going to like be worth a lot of money in the future and they can maybe sell to other people. Catherine asks, are there charts that monitor frauds and manipulations of these platforms? I would recommend checking out Dune Analytics and just kind of clicking through the various dashboards. And then you can kind of arrive at your own opinions of what's happening by looking at this stuff. Blair asks, is wash trading similar to double spending? It is not. I can see why you might think that. Double spending is really when I have $10 and I attempt to spend $10 like at multiple storefronts. Like say I have $10 and I'm trying to buy $10 worth of goods at CVS, or I want to buy like a $10 Chipotle burrito and I'm trying to spend the same $10 like in multiple places. That's double spending. And it's kind of the key thing that cryptocurrency prevents. It was a major breakthrough that it prevents this stuff. But wash trading it's different. It's kind of like you're just juicing the volume numbers on an exchange to make it seem like there's more activity than there really is. But it doesn't require like spending the same asset itself in multiple places. Yeah, there are other platforms Morgan has pointed out, like Nansen. I actually haven't used Nansen, but there are a whole number of different analytics platforms out there, and I'd recommend doing your own research and trying to find out which ones you think are most valuable to you. But yeah, thanks for dropping that here as well. And David asks, is it called wash trading because it's used to launder money? I actually don't know the etymology of that. It's a good question. You're going to have to look that up separately. But I don't think they are technically related. I think that I think there's a difference there. You can certainly launder money through wash trading, but yeah, I'm not an etymological expert here. Financial performance, token terminal. This is another tool you can use. They're trying to basically allow you to basically get like traditional finance analytics on projects. So you can see like the revenue that projects are generating. You can look at like price to sales and price to earnings ratios. And they do these valuations based on like how many fees people are paying to use various platforms. I pulled Axie Infinity. It's a very popular game out over here, and you can kind of see how much revenue it's making here in this chart. But yeah, you can see OpenSea. OpenSea is the highest. It's making the most money of any app, any like Web3 app. Axie Infinity is like third most, and MetaMask is down over here. Anyway, yeah, you can go down the line and see all this. I know we just have like 10 minutes left, so I'll try to be quick about the rest. I've been answering questions along the way. We're not going to take a quick break because we're so close to the ending. Let's talk about DAOs a little bit. We talked about DAOs already. And the joke again is that it's a group chat with a bank account. You know, I know we're kind of running short on time, so I'll go quickly through here, but you can think about like, people don't often think about the company as a technology, like the idea, the concept of a company, but it is a technology. It's a legal innovation that had to be created in the mid 1800s in like Britain in its current form. And by current form, I mean like with limited liability protections, the ability to sell shares to the public. But our idea of a company today really comes from like this hierarchical, almost like you could think of like military mindset where there is a hierarchy, kind of like the post-World War II industrial organization. There's like a general, there's a CEO in command, and he kind of like sets the agenda, and he hires, you know, various chief officers to help him run a company and make money. But DAOs are bottoms up. They're not top down. They're sort of these loose collections of people that are finding each other online and creating grassroots organizations. It's a really exciting field. There are tons of DAOs out there. The earliest DAO was a venture capital firm that had a big security bug that went kaput in 2016. But now perhaps people saw there was a DAO that formed last year to buy the Constitution of the United States. This is Nick Cage stealing some document. I don't know if it's the Declaration of Independence or the Constitution or whatever. But anyway, like DAOs have made a comeback. They were born in ignominy, and now they're back in action. There are tons of them doing all sorts of things, raising money. In fact, here is a look at all of the DAOs out there. Hat tip to Koopa Troopa, this guy Cooper Turley, who's like a big DAO guy. You can find him on Twitter. But he put together this sort of like overview of the DAO market, as it were. You've got DAOs that collect NFTs down here. You've got DAOs that fund things over here. You have DAOs that like invest in things, DAOs that create financial software, DAOs that are media DAOs, which might be pretty interesting for the folks here. I'm going to talk a little bit about them. I actually joined this DAO not too long ago, Bankless DAO, and it's got one of the best onboarding processes. So if you're looking for a DAO to like check out and understand how this world works, I might recommend taking a look at Bankless DAO. You can just sort of like Google them and then join their Discord. and get onboarded, and you can sort of understand the process. Bankless DAO focuses on media. So they're a decentralized media organization. Instead of having a publication at, with like a masthead of editors, it is a kind of like grassroots, anybody can contribute. You have to pass some tests to like show that you can write cogently. and yeah, they have like layers of editors, but it all has come together spontaneously online rather than being like an actual company. Pretty weird. So Discord is where people collaborate. If you want to explore DAOs, definitely use Discord. That is where Bankless DAO lives. You can just Google a DAO and Discord, and then you can usually find a link to get invited to one. Although some of them, I'll note, like some of the social DAOs over here, some of them have like what are called token gated communities, and you can only join if you own a certain number of tokens. And this kind of like, they want to prop up the price of their tokens, so they make people buy them to join the club. Yeah, it's a whole weird economy. DAO tools, Mirror. People can go set up a Mirror account, and it's basically, how many people are familiar with Medium? Raise your hand if you know Medium, the blogging software. Lots of people know Medium here. So Mirror is kind of like the Web3 version of Medium. And the idea is it lets you crowdfund essays you might write. It lets you create non-fungible tokens that you can sell to people that are connected to the stories you write. So you can it basically lets you crowdfund and lets people get ownership of your stuff. And they're adding all new sorts of features constantly. It's really cool. I have to use it more, but yeah, there's a lot of also crypto specific content on Web3 on Mirror, as you might expect. The crypto people like to write about crypto. Coordinate is a tool that DAOs use to pay their contributors. You can check it out. If you join a DAO and you get to the point where like you're earning money because you're contributing to a DAO, you'll probably get paid through this thing called Coordinate. And I won't go into the specifics because we're running out of time. Snapshot. This is another sort of tool that lets you basically vote on the protocols. We talked about governance of protocols earlier. Snapshot is a tool that like lets DAO communities vote on direction of projects. So you can see Bankless DAO here, Uniswap. The value add of Snapshot is that to vote using it, sometimes to vote, you need to like pay transaction fees, but Snapshot makes it really cheap. So that's why people use Snapshot. This we don't need to get into. DAO tools, here's an example. I mentioned Bankless DAO was something I had joined. And the point of Bankless DAO is it's a decentralized community, and they say their mission is to help the world get bankless, basically to remove the banks from the equation here. And you have a Discord server. And yeah, so here's some further Web3 reading. Shameless plug for some of the stuff that Andreessen Horowitz, my company, has put out there. It's these, we call them canons, basically just a whole list of resources to understand DAOs and NFTs and Web3 a little bit more in depth. Yeah, and so, okay, so basically to conclude what we covered today, we covered the ethics, journalistic ethics when it comes to crypto reporting. We covered a history of money, the invention of Bitcoin, how Ethereum came about and what it enabled, the different phases of the internet and the web. We talked about a bunch of these crazy acronyms like DeFi and NFTs and DAOs. We created digital wallets for ourselves, which is pretty cool. So now you can go out there and actually get exploring with these tools. And we explored the blockchains using a whole bunch of different sets of analytics. So I hope that you have gotten basically an understanding of this wacky universe. if you've got any questions, I'm happy to stick around and answer a few in the chat. But we are at the noon Eastern time right now, which was the end of our allotted programming. This was a lot of fun. My voice is a little hoarse from talking for 3 hours straight, but I hope that you all got some knowledge out of this. I hope you can go out there and like feel a little bit more equipped to participate in all this stuff. Oh yeah, and one last thing before people leave, if you could take this evaluation form that Jennifer Dale has dropped in the chat over here. This is a survey form that could ask you, yeah, like basically what you thought of today's course and whether you got anything from it. Yeah, maybe if they get enough positive feedback, they'll make this a semester-long course. So be sure to do that survey. And by the way, if everybody wouldn't mind sending me your public Ethereum address in the MetaMask that we all downloaded, I am going to try to figure out whether I can like get a goodie for you all. Yeah. So in the Web3 world, there are these things called proof of attendance tokens that are basically like badges that show you participated in a particular activity. And a lot of DAOs use this to like drum up engagement. So anyway, I have never created a proof of attendance protocol token before, but if you send me your public Ethereum address, I'm going to try and figure out whether I can airdrop you a free NFT, and it can be your first NFT in the Web3 world. Yeah, where should you send it? You can enter it into the chat here, or maybe if you want to, you could even like DM me on Twitter. Here, I'll give you my Twitter address, my Twitter handle. Yeah, feel free to like, if you're on Twitter, just like DM me it. Again, I have never done this before, so this is like going to be a little learning curve for myself to figure out if I can airdrop an NFT to you all, but that's the plan. We're going to try to do that. Yeah, so thank you everybody for joining. I hope that this was valuable. I had a lot of fun putting this together, and yeah, so I hope you all learned as much as I did throughout the process. And don't hesitate to get in contact with me on Twitter or elsewhere. Happy to answer your questions and follow up. Yeah. All right. Thanks, everybody.
Thank you.
Thanks, Robert.
Thank you all.
Thanks, Robert. Bye.
Thanks so much. I'll leave this up for a little bit while people potentially get to the survey and maybe check out the Twitter.